road now, driving to visit the mine site of First Mining Gold. It's one of their flagship projects that we're visiting. It's called Springpole. It's located in northwestern Ontario. It's close to a remote town called Sioux Lookout. We're driving from Winnipeg, Manitoba to Sioux Lookout right now. It's about a 5-hour drive. And from Sioux Lookout, we're going to take a seaplane, a private plane. It's going to be about an hour ride to the mine site itself, which is in a remote area of northwestern Ontario. We'll be looking at the site. It's going to be a very exclusive access to media and analysts only by invitation. And we're going to be looking at some of their samples. We're going to be talking to Dan Wilton, the CEO, on site. We're going to be talking to some of the geologists on site. And we're going to be showing you a behind-the-scenes look at how one of Canada's premier mining sites and explorers operate. So stay tuned. This is going to be a very interesting documentary. I'm very excited about this. We have a very rare opportunity to get an inside look at one of the premier mines in Canada. I'm here with Dan Wilton, CEO of First Mining Gold, and we're at one of their flagship projects, Springpole, which is in northern Ontario. What are we looking at, Dan?
Oh, this is the Springpole camp, and first of all, David, welcome. It's
Thank
a pleasure
you very much.
to have you
I
here.
feel like I'm infiltrating the camp because everywhere I see authorized personnel only.
Well, we take our safety seriously around here. It's very important, but we're delighted.
So we get a very inside exclusive access to some of these otherwise blocked off areas. But let's start from the top.
Sure.
Springpole is one of the two flagship projects of First Mining Gold, the other one being Du Parquet in Quebec.
Correct.
And then you have two other projects, Cameron, and then a joint venture with another company. But let's talk about primarily Springpole today, since we're at Springpole.
Yeah.
So give us a sense of the scale of the resource indicated and inferred so far, and then we'll start there.
Yeah, so the resource at Springpole is about 150 million tons of indicated resource, another 16 million tons of inferred, average grade around 1 gram gold and 5 grams silver. So this would make it one of the largest undeveloped gold projects in Canada. And certainly, we'll talk more about this, but one of the most advanced from an environmental assessment perspective in terms of how far we are down that key milestone in the permitting path.
Key things that we'll point out along the way are just, what we have in terms of camp facilities. We've got this bunkhouse that's set up with the kitchen, the rec room, bedrooms around the perimeter, as well as this 21-person bunkhouse. So capacity to host about 34 people in camp in single rooms, so no sharing. Of course, you can increase that to some extent. Most of these tents that we have down here are now used for storage. Traditionally, they were used as accommodation, but the project has since moved on quite a bit on that. Bathrooms, Jack and Jill set up over here, and then we'll go into the core processing facilities and all of that. So, but essentially what this all means is, like, when you think of a remote camp that has no infrastructure and all of that, this camp is pretty well established, so we've got a lot going on.
Yeah, where are you right now in your timeline, and ultimately, where do you see this project headed in the next 5 years?
Yeah, 5 years, we're hoping for a lot to be going on here. So we submitted our final environmental assessment on Springpole in November of last year. It's right now going through comment response, and we're working closely with Federal Provincial Government Impact Assessment Agency of Canada and the Indigenous communities who we're working with around the project to kind of better understand it. We hope to be done that comment response period in the next couple of months. And then at that point, the federal government and the provincial government will go away, finish up their work, write up their environmental assessment reports, continue all the while through consultation and engagement with the Indigenous communities we're working at, but targeting an EA approval in Q1 of 2026.
The presentation that you gave earlier that I attended, you said that since the 2000s, the company spent roughly $350 to $400 million investing in this project. It sounds like you're ready to go all the way to take this into production. Is that correct?
Well, there's still a lot of work to do.
Yeah.
On that front, over the course of the next couple of years, we'll need to update or finish a feasibility study. The project's at a pre-feasibility study level right now, but most of that feasibility study work we've done since 2021 until today. And then there's a lot more detailed engineering and characterization work you need to apply for permits that come after the environmental assessment approval. So then you get into your detailed construction and operating permits. So still more work to do there, but I think, we've just completed a financing here. We're well positioned now to keep moving this project forward through that EA process, finish the feasibility study, which we're targeting to have done in 2026, and then on from there to a construction decision once you have all of your permits for construction, and that would be something in a time frame of 2027, 2028.
Yeah, what's interesting about the geology is that I believe the open pit mine is currently underwater. Can you tell us more about that?
It is, yeah. This the deposit is located in the north basin of Springpole Lake. So that basin represents about 6% of the surface area of the lake, about 3% of the volume. So the development plan involves building a couple of dikes, and then dewatering that basin of the lake. There's an open pit mine that you then have an open pit that at its deepest is down about 300 meters. And at the end of the mine life, that basin is refilled both through natural means and we end up to accelerate that refilling, pumping in some water from the surrounding lakes. And the infrastructure that's left at the end of the mine life is the tailings and co-disposal facility, which would be a hill of about 70 meters in that direction.
Yeah.
And then, all the rest of the infrastructure ultimately is taken out. Yes, absolutely. And that's why in the end
Yeah. So a lot of the infrastructure where we stand here, you can basically see we're at the top corner of that open pit or proposed open pit, everything sort of striking in that direction. I'll actually have to turn this around, then we're looking the right way. So on the right of us over here, that is essentially where we'll have the co-disposable facility. So it's on the other side of the bay over there. You can't really see it here in the fall. It's beautifully open. So next time we can do that. But that's essentially where we're at. And then as Matt said, this is some of our bedrock, our outcrop geology, everything turning down, feeding into that strat column we showed you guys earlier. A lot of this information supports and feeds into that and how we understand the nature of the deposit and how it came to be. Starter pit over here, as you said, 300 meters, and we move right over next after that. That's essentially where we get into some of the stockpiles, one there at the back as well. Other things we walked past is just the current infrastructure. Over here, what we have is our core storage facility. So most of the core in the modern day has been stored inside these tents, and we'll look into some of them, show you guys. Pretty good inventory in terms of how it's managed, cataloged, and indexed, available for any further characterization work or whatever we need to do. Some of the legacy core is stored outside. And then we've got some core at the back as well, but pretty good pulps, rejects, all of that's managed as well. Some of it's in those containers that we walked past. So there's always, that resource that you have to come back to advance any further work.
It's quite a tight footprint for a mine of this size. The footprint would be about half of that of most other big open pit mines of similar size that have been permitted in Ontario.
And then I think in the production estimates that you've put out, the company's put out, the estimate is that the all-in sustaining cost ASEC would be under or just around $1,000 an ounce, which places it roughly 30% lower than a lot of peers. How would you manage to do that?
Yeah, so the pre-feasibility study had a number that was much lower than that.
Right.
It was around $600 an ounce net of a silver byproduct credit. And there's significant silver in this deposit, which is important. Silver's a very critical mineral, as we all know. And the silver is recoverable, which is a bit unique for projects like this. So you achieve the low costs in this project really through a couple of ways. Number one, we're going to be connected to grid power. So there is a power line that's about 30 kilometers away from here. We'd likely need to connect to a higher voltage power line about 90 kilometers away. So being on grid power is immensely important because your cost of energy is lower, but your greenhouse gas footprint is also much, much lower when you're connected to grid power. So that's important for the cost profile. The mine itself has a very low strip ratio. So for every ton of ore that you mine, in the end, we think Springpole will end up being between 2 and 3 tons of other rock that you need to mine in order to get that ton of ore. That's really important because the lower that number is, there's a lot of open pit mines in Canada that would have that strip ratio between 5 and 7 for a big open pit. So you're mining half the rock in order to get the same amount of ore. Now, the grade of that ore is pretty decent, certainly for most of the years of the mine life, comparable to a number of other peers here. Average grade of about 1 gram gold and 5 grams silver. But in the first 5 years of the mine life, there's quite a bit higher grade there as well, which is helpful, helps accelerate the capital payback from when you build the mine. So,
speaking of capital, you raised almost $40 million this summer. Congratulations.
Thank you very much.
I know it's not over 40 million, but it's close enough. Okay, so what is the capital going to be used for?
So primarily, continuing on the path that we're on here to get through the environmental assessment, it gives us good capacity to keep working with the Indigenous communities we're working with and making sure that they have capacity to go through this process, understand the project, and ultimately, it's our goal to have agreements with all the communities that we're working with moving forward with the project. It gives us the flexibility to start into a feasibility study, which again, we're targeting for next year, but there's some of that early works that we could start sooner because we have the capital available. Gives us the ability to start on some more detailed engineering, potentially to shorten that time frame between when you get the environmental assessment approval and then there's that follow-on 12 to 18 month permitting time that you have to go through. So we can start some of the work that we would need in parallel rather than waiting to do it in series. So that's primarily it. And there's also some important work that we're going to want to do at Duparquet, including some important exploration work, which is ongoing, and then some important environmental management work at Duparquet as well.
I'd have to go through it myself. It's pretty continent rock, so it's not all this. It's very localized in terms of our understanding. Now we're able to delineate these zones, and the work that we're doing is further characterizing that as well. That's some of the upcoming work. Dan was talking about the winter programs, what we need to do, and it's just further hone in on those areas. But yeah, overall pretty competent, favorable for everything in terms of characterization, geological understanding. All of these tents are kind of full to the brim. Here and there we've pulled some core out because we needed to display them down in the core shack, but this is essentially how we manage this inventory over here, and similarly on the outside.
So it took them a while to figure out ultimately how you drill and recover this. So there was in the early days some issues of core recovery. They ended up dealing with it with different polymers, and in the last few years I think we've actually got a lot better in terms of different ways that you can drill into these highly altered zones and recover the material. But that was one of the things that people had looked at in the past was, there were some challenges of core recovery in the early days of that kind of early 2010s.
Dan, take us back to the beginning, to the founding of the company. I believe it was founded by Keith Neumeyer 2015.
Yes.
Correct?
Yeah.
So I think there was a vision of what he called a mineral bank strategy, acquiring things on the cheap. Tell us about that.
So it was before my time, but the strategy, the company was founded by Keith Neumeyer, who's obviously had great success with First Quantum and First Majestic.
But
and in 2016, which was really 2015, the tail end of a 4-year savage bear market in junior gold equities, they actually, what a lot of people don't appreciate, they started the company and rolled a few exploration projects from First Majestic into the company, thinking that it was going to be an exploration story. And they came to realize in 2015 that you could not find gold for cheaper than you can buy it. today, or at that time. So they went out to acquire every 1 million ounce resource that they could find in Canada that they could buy for $10 an ounce or less. And that was the strategy. We're going to put all these things together. Gold price is going to improve. Market sentiment's going to improve. These $10 an ounce assets are worth, 30 or 40. We'll find partners who will come in and do the work on these projects. And, they did a great job in accumulating these projects. And then in 2017, 2018, really came to realize the value opportunity is not so much in buying at 10 and, selling at 20. The value opportunity is buying at 10, putting in the work to get some of these projects through development milestones such that you should get $100 to $200 of value for it. And that's really, it started that in 2018. I joined in 2019. And that was really why Springpole became the focus. It was the biggest asset in the portfolio, really, really robust project. And we had a pretty clear path to how we were going to move this project down the development pipeline. And so we started doing that, and including, they submitted into the environmental assessment process in 2018. We brought on our current environment and community relations team, including Steve Lyons, our VP Sustainability, in 2020. And have been full on in that process as we go through. Because these projects, historically, when you get a big project like this in Canada to a point where you've got your environmental assessment approval, on the borderline of construction ready with a fresh feasibility in hand, those projects have tended to trade in the market between $100 and $200 an ounce.
Yeah.
And we're trading today at $10 an ounce. So that opportunity still exists for investors. The difference between now and when Keith set up the company in 2015 is that those catalysts that get you there are now, 9 months away, a lot of them. And, those were 10 years away when he set up the company. So, I think the value opportunity here, and that's what I've always looked at this as a significant, deep value investment opportunity in gold. And gold's done its job, right? The metal's done its job. The gold industry has done its job. You're starting to see those valuations of producers start to ratchet up. They're starting to become core holdings. You're seeing funds inflows into the sector for the first time in a long time. And the one thing that the sector does not have are near-term development opportunities. It's an absolute desert out there for projects that can be built in Canada between now and 2030. There's very, very few in the gold industry. And Springpole is one of them, and arguably in the EA process, one of the most advanced. So you've got this scenario where producers are generating record levels of free cash flow, unprecedented record levels of free cash flow, because they are capturing that $3,400, $3,500 gold price. They are now starting to return capital to their investors, which is great. But I saw a report.
Return capital in what way?
Usually dividends or share buybacks are the two main ways.
Okay. Why can't they return capital by buying your company?
Well,
Hypothetically
investors for a long time criticized the gold sector for
Sure.
top of the market acquisitions, right? We're starting to see a more robust M&A activity now. You've seen a lot of, mines that have been taken into production now getting bought at pretty healthy premiums, which is great. Some of that money is now coming back into the sector. I've sold high. I'm now going to try and buy low and find that next development opportunity. So that's coming. But I saw an interesting report from S&P this morning that despite the gold price being at record highs, gold exploration expenditure is down this year for the second year in a row. So companies have more money than they ever have, and the big companies still are not exploring. And more importantly, even with the little exploration they're doing, they're just not finding anything big.
So what are they doing with their cash reserves?
Well, at some point, we need to remember that this is an industry in which when you produce an ounce of your gold reserves in the ground, it's gone.
Yeah.
It's produced. It's above ground. You need to replace it. If you can't replace it with exploration, you need to go buy new productive capacity. And while they've been reluctant to do that, I think what you've seen is when companies hit these milestones on permitting and demonstrate that you have projects that are going to be able to be built, then you have the industry, which is getting increasingly desperate, really starting to pay attention to projects like Springpole.
So what are the estimated net present values of Springpole plus Duparquet?
Springpole plus Duparquet, if you look at just at the technical reports that we have, combined today, and I have to factor a little bit for the new shares that we've just issued, but combined today would be, let's call it $1.60, $1.70 a share. We're trading at 17 cents. So, you know, a solid 10x from where we are today.
That's based on what gold price?
That's based on Springpole at a $1,600 gold price and Duparquet at an $1,800 gold price. So when you back those up and say, okay, what's the leverage of those NPVs to gold price increases? It's $250 for every $100 in the gold price above those numbers. So you want to run it at a $2,500 gold price, it's like NPV of $3 a share. You want to run it at a $3,000 or $3,500 gold price, the NPVs start getting, you know, up to $5, $6 a share. And you can buy the shares in the market today at 17 cents. Now, you still have to build 2 mines, right? And that's one of the other things that people always get concerned about is obviously small company, where are you going to get $1 billion to build a mine? And I think our perspective on that is we're getting to a point where the industry really needs these projects to move forward. And that's going to be a really important part of, I think, how we get Springpole financed is likely going out to look for a partner.
I think the transition from an explorer like yourself to a producing company requires that extensive capital investment into, you know, producing the infrastructure necessary to start producing the minerals, and investors are concerned about the dilution of shares during that process. How would you address that concern?
Well, I mean, yeah, I think if we were going to build Springpole ourselves, you obviously would be concerned about, you know, it becomes a bit of a vicious cycle where if your market cap is small, then you're going to have, you know, massive dilution if you go to build the mine. The way around that, what we've seen done pretty successfully in a number of other cases in the mining sector is if you bring in a partner who's more investing money into the ground, so they're not coming to buy your interest in the project, but and say they're going to commit $500 or $600 million to the build, and then you're only talking about you and a partner going to find the balance of that. That's all in the realm of doable. So there's lots of ways that we can do it. It doesn't need to be just us moving the project forward, but at the same time, you know, that's certainly not something that's impossible at this point. And I would tell you that if our market cap is still $200 million, when you've got a massively robust project in a tier 1 jurisdiction with proximity to infrastructure that's permitted, like if that's not trading at $100 an ounce in the market, then, you know, then I think there's something else wrong that we need to address, and I'd probably get fired. Dirty stuff. Will someone buy it? Absolutely. 200 grams gold, it'll go to China all day long. Yeah. Great Bear's going to be a miracle worker.
In this core shack, we've got the ability to easily run a 3-4 drill program throughout the season, depending on what we need to do. And as I said, we cut it here, we do the QA/QC, get everything sorted from here, go straight onto a truck, and then ship straight to the lab. Pretty effective system that we have, management of dispatches, making sure that we have that chain of control right throughout. And again, just speaking to the integrity and the resource and what we're doing over here. We're going to go into the core shack now. Matt has laid out some core with our team, and essentially it'll speak to those 2 sections that we've highlighted. There is more sections available to go over, but essentially that would be the main focus.
So essentially what we have laid out, starting over here in the corner, and as we go across, we have our 250 vertical sections. So I do have some laminated sections, and you can see on the board, or we're going from the west side of the pit into the portage zone and coming out into the starter pit, which is over on this side. So kind of starting, so what I do have the laminated sections. And in these binders, we also have sections across the whole deposit for anybody who's interested in viewing as well, and then all the logs. Yeah, and I'll just start with the west pit wall. So this was our Air D hole, so drilled for geotechnical and geochemical classification of the pit wall, but this is more or less representative, so as you can see in the log, of our intermediate to mafic volcanics on the pit wall. So in the stratigraphic column, if you look back to the stratigraphic column on the board, we're at the very bottom unit of that, like mafic to intermediate volcanics. very competent rock, not much mineralization. Like some areas you'll get tiny bits of some background elevated gold, but if I was, as we are exploration geologists, I'd be like, oh yeah, you're close to a system.
Yeah.
As we go down and you're next to 5 million ounces, right? So, and then this is very similar. This is the west side of the pit, but if you see this iron oxide that's been a little bit more weathered, similar to what we were seeing on the edges of the pit over there, of like the increased iron oxide alteration and like the tight competent rock. And then as you come through, you get into your more mineralized systems. And then this is kind of still at the bottom of the mineralized system at Springpole, but getting more closer to that, what we would call your SIC complex. So this is right beside the main ore body, but this is more of your trachyte and intermediate exhalatives, kind of represented here, right below the resource, and then into that main portage zone. Or as you can see, it's not probably the easiest thing to log, but you do get glimpses of this medium grain trachyte like class that you can pull.
Yeah.
Very, very mineralized, especially when you pick up some of these sections and you look at them, you can just see the alteration and the disseminated sulfides all throughout.
Mineralization is also pretty disseminated throughout here. You can see it with the naked eye, but we've got a hand lens as well.
It'd have to be the craziest stopes I've ever seen in my life. Yeah.
Well, yeah.
So yeah, back into this section, we're kind of moving, flipping over, we're moving eastward along the pit into still some low grade, just showing the variability in some of the grade, which the variability is very low. Like you go from probably a 3 gram average, 2 to 3 gram average, to your 0.3, which is kind of tied also to that alteration zonation as you go across the whole pit. But yeah, this is more of that.
Well, I don't think that's happening anytime soon because you've been in this space for a long time. Actually, how long have you been involved with First Mining Gold?
First Mining, I joined beginning of January 2019, so
Yes.
6.5 years.
And then prior to that?
Prior to that, for 5 years, I was a partner at a mining-focused private equity investment fund.
Yeah.
And prior to that, call it a 20-year career in investment banking.
Yeah.
Mostly focused on equity raising and M&A for the mining
So
sector.
you've seen a lot of different companies over the course of your banking career, even before you stepped into the management role of what you're doing today.
Yeah, our real focus when I was in banking was in run up to the peak of the last cycle.
Yeah.
Financing single asset project developers in the stage that we are at, up to the point where you would bring in a larger company to either sell the project or bring in a partner to build the project.
Right.
And so we did that on a lot of mines now, and say our track record was pretty good, but of the mines that we found partners for and or sold, projects that we sold in 2009 to 2011, Blackwater is now a mine with Artemis, $5 billion market cap. Magino is now in production and obviously went into Argonaut's hands, and Argonaut ended up getting bought by Alamos. So we've got a pretty long track record of kind of identifying these good assets. Mount Milligan is another one that went into Thompson Creek, now kind of a core holding of Centerra. These big low-grade projects, and I'd kind of put Springpole in this category. At times, when capital is tight and or prices are down, people think these are terrible. In good markets where prices are up, these are the projects that everyone wants to build, and we've seen a few of those now coming into production in perfect time in the cycle. I think we're going to have the same opportunity here, but it's finding a partner that kind of shares that vision and wants to, see these projects.
So projects like Blackwater. What defines successful projects that you've seen that eventually became sold off to other companies versus the ones that went nowhere?
I mean, I think most of those, when you look at them, when we sold Blackwater, it was pre-PEA, so a long time ago.
Right.
But even, Blackwater going into Artemis, it was at a time when it had its environmental assessment approvals. They were kind of waiting on final permits. Most of that permitting risk was behind it. They had agreements with the communities they were working with, which is another really important component. And that's when the mining company who wants to come and build it says, okay, well, that project's now de-risked enough. I see our path forward. This company's done a good job of taking care of a number of those risks. So for us, it's kind of that point that we're at between now and a year from now, where you get the EA approval. Hopefully, we're signing another couple of agreements with the communities that are doing a ton of work on the project.
Right.
And at that point, you have to start measuring this project on its merits. And the merits of this project, what's amazing about it is the ore body itself. The continuity of this ore body is almost unique in Canada.
Yeah, tell us about some recent drill results.
Yeah, so some of the drill results that we've had, which were more on the eastern side, so not in the existing deposit, but a couple of 100 meters from the existing deposit, drilled down in the top of the hole, 75 or 120 meters of 0.75 grams gold inside the existing pit. In what was characterized as waste. So that's super high value when you can do that, because it basically, means that stuff that you thought you were just taking over into your mine rock piles, you're actually going to get gold out of it, right? So there's some real value there. But yeah, the thing that makes Springpole unique is this continuity of the mineralization. It's mostly one big blob that's 1.5 kilometers long and 150 to 350 meters wide and about 500 meters deep. So it's not a series of veins. It's not a network of vein swarms. You're not trying to mine a few 2-gram veins to hope that you get 1 gram to the mill. It's just continuously mineralized. And that makes it pretty unique. It also gives you the opportunity to mine it in a really low-cost fashion, which is important.
So if everything goes according to plan with the financing and permitting and the EA, when do you realistically see construction happening here at Springpole?
I think that construction decision, depending on how the process rolls out from here, but if we can start some of that longer lead time permitting work a bit early, which I think this financing gives us some ability to do, then you could be looking at a construction decision late in 2027 or early in 2028. And that's assuming that environmental assessment approval is coming in Q1 next year, which feels like it's on track.
So once this site becomes fully operational, what does a typical day here look like, not just for the site, but also for the community nearby?
Well, that's an interesting question, particularly the communities of Cat Lake and Slate Falls, which are each about 40 kilometers away. I mean, this will be the biggest economic opportunity that they will see in a generation. We're talking about hundreds of jobs being created here. And, our goal, we do it even now as a development company, really trying to maximize the Indigenous employment at the site.
Yeah.
We've done a very good job with our camp staff and on our team. I mean, overall, I think our team is still trending more than 20% Indigenous employees, which we're super proud of. Approaching 50% women in our team, which we're also super proud of. So it just creates an enormous opportunity, not just for those communities, but for the whole region. Municipalities like Sioux Lookout, where we started this morning, Red Lake, Ear Falls, it's a long mining tradition and history in this area of northwestern Ontario. But this is the size and scale of a project that can bring, billions of dollars of tax revenue. It can mean millions and millions of dollars of direct economic participation from Indigenous communities. It can mean millions and millions of dollars of contracting opportunities, the opportunity for communities to joint venture, set up new businesses, build skills, build capacity in those communities. So the driver that this can be as one of the largest investments in this area of northwestern Ontario in a generation, the spin-off benefits of that can be enormous.
Well, the thing with generalist investors is that they don't just have Barrick and Newmont to pick. They have NVIDIA and Bitcoin and the S&P 500.
Yeah.
You're competing with all of those other sectors.
True.
By you, I mean the gold industry.
Yeah.
And so ultimately, for the generalist investor watching this right now, what is the upside for the gold industry versus everything else that has gone up in the last 5 years?
Well, I think number one, and I'm a fundamental value guy.
Sure,
right?
yeah.
You and I have this in common. You're, long history of being a value guy. I have always been a value investor. It's what attracted me to these opportunities with the assets we have at First Mining Gold. I think it is very difficult to find value in the S&P 500. You know, I think it has been supported by flows of capital, which is great. But I think that if you're looking at this industry, and you should be looking at it now, I think you need to be looking in a broader context of diversification and risk mitigation that gold has provided to investors for thousands of years. And I think there are a couple of watershed moments that you're starting to see floated in the media. I'd be curious on your view on, is there a revaluation of the U.S. gold reserves coming? I've seen that floated now officially a couple of times, right? They're not doing this by accident.
Yeah, Ray Dalio's posted this on X
explicitly.
He's questioning whether or not the dollar will return to a gold standard. But anyway, he was just kind of musing.
Yeah, but in order to do that, you know, to revalue those ounces, it's going to be to a gold price that's going to be multiples of where it is today.
Right.
So then you come back to that deep value and leverage to a gold price that a developer like us, that you can buy well-established, documented, understood, scientifically demonstrated ounces in the ground at $10 an ounce for something that today is trading at, you know, 3,200, 3,300 going to 10,000. That opportunity, when the flood of capital does come into this space to look for those value opportunities, first of all, it's not a very big space, right? When you think about the entire, you know, universe of gold developers being, you know, a few $1 billion.
Right.
Like, you get a few $1 billion of inflows of people chasing these opportunities, and you can see these things revalue from $10 an ounce to $100 an ounce pretty quickly. But the fundamental value also becomes, when you have your permits, you have a timeline to production, people can start running discounted cash flow analyses and saying, okay, well, I'll bring this back by 3 years, but, you know, if I can build it for $300 an ounce and I can buy it today for $100 an ounce, and the production cost is going to be $1,200 an ounce, I can still see, you know, at these gold prices, all of this margin there in the future. So at some point, it becomes rational again. And that all comes with this de-risking process.
And I'll just put this out there as well. People are right now looking for companies to invest in that are not sensitive to tariffs and input costs going up because of tariffs. Producers in the gold industry are one example, because I think the main costs are labor, right? Oil, if you're a producer. None of these things are, you know, really impacted by tariffs from abroad. You know, labor is locally sourced. If you're an explorer like yourself, you know, you're drilling right now. That's for your primary cost. And of course, you've got local labor. You don't have to depend on things coming in from China. For your bottom line. So that's something that, you know, people need to be aware
I think
of.
on the developer side, you're a little more exposed to concrete and steel, but concrete is local almost by definition. But steel, you know, the upside of this part of the argument is you've got all this excess capacity in Canadian steel producers. All the governments want to see these projects go forward in order to buy Canadian steel. You know, do you think that moving forward with the permitting of a project like this, you get this into construction, like there's, you know, tens, if not hundreds of millions of dollars?
Gold was tariffed for like 10 minutes last week before they realized that was a bad idea.
Well, and the reality is you don't need to sell your gold into the U.S. The reality is you get a bar of gold that you pour at a site like this. Is why the gold business is actually the best actual business in the world, is that when you produce a bar of gold, you call someone, they send a helicopter to come pick it up, and they pay you for it immediately. Like, there's no working capital issues. You know, it's very transportable. You can get it out of anywhere in a hurry.
Well, are you noticing your costs being affected by the tariffs? People are talking about inflation through tariffs. We're looking at economic data. We're talking about a lot of theory, but you're in business operating on the ground. Tell us about what you're observing.
I think for us and our costs right now, which are primarily, you know, engineers and environmental scientists and consulting we're working with, and we're seeing some cost pressure there. I think our drilling contractors, we've got great relationships
But that
with.
cost pressures, that's not related to tariffs.
Not
though,
related to tariffs.
Right, yeah.
I think labor consulting rates not really impacted by tariffs. I think
it's gone up a
our
little
drill
bit, yeah.
contractors are facing a little bit of pressure in costs, but again, not really impacted by tariffs. For us, it's more like we're gearing up to go through a feasibility study
Sure.
and getting pricing on equipment.
Yeah.
And so all of a sudden you're into a decision of, am I going to buy a German haul truck or am I going to buy a Caterpillar haul truck?
Right.
Well, likelihood is from a risk perspective that the Caterpillar haul truck is going to have a lot higher tariff on it coming into Canada
Makes sense.
if you're in a tariff war, right? But, are there other potential suppliers, whether it's Japan, Korea, Europe? Yeah, I think that sourcing is going to become more strategic, driven by what is, in my humble opinion, a bit of a challenging economic rationale for having tariffs on things. I mean, as a, call it an economic liberalist, which is how I would describe myself. I've always found tariffs and the deadweight loss that they create to be the challenge.
How is this site going to change the next couple of years, you think?
Well, this is set up for kind of the exploration and development stage right
Sure.
now. In the end, I think we'll be sitting right now inside the open pit.
Right.
So we'll have to build a new camp, which will be a few kilometers that way.
Okay.
That new camp would probably be able to accommodate in construction 600 people, during operations probably 300. So, modern sort of dormitory accommodation with recreation facilities and everything that workers expect in a modern camp. And then, the development scenario here is you're building the 2 dikes and dewatering this basin of Springpole Lake, and the open pit will basically be right here. So,
Cost-wise, what are we looking at for everything you just talked about?
well, ultimately, for the entire upfront capital cost for the development in our pre-feasibility study was $718 million US, but with capital and cost and operating cost increases, we expect that number is going to be close to $1 billion by the time we're done. So it's a big project.
So several rounds of financing to come.
Well, or as you said before, one of the things that we're likely to explore is there a partner who wants to participate in this project? And I think there's a real rationale for a partner who would want to put that money into development, so they don't have to go pay a big premium to go, buy another company.
Yeah.
In the end, they put the money into the development of the project. They have a real say. They drive that development process themselves. And First Mining ends up owning, a significant portion of the project. And you look at a couple of examples, which have been huge successes recently. Osisko is probably the best one. It's exactly what they did with Windfall, right? Sold a 50% joint venture interest, and then their joint venture partner came back and paid them $2.5 billion for the next 50%. We're talking about economics in a similar kind of realm for Springpole. The other one that we like to point to is an Australian company called Gold Road.
Yeah.
Which is just, again, being bought by their joint venture partner for a value of a couple of $1 billion. But they were a 50% holder of a 300,000 ounce a year project in Australia, and their partner basically funded all of the construction capital of the project. So, you end up taking some dilution on the asset level, potentially, but there's lots of different ways that you can manage that capital particularly that capital cost nut that you have to crack to get the mine running.
And just going into a little bit more detail about the geology of this particular project, we have here 2 geologists who work at First Mining Gold, Caroline Pinar, Director of Exploration, and Matthew Cannon, Senior Exploration Geologist. Welcome. Thank you very much for showing us your wonderful project. Great tour. Why don't we start by talking about what makes Springpole unique as an asset and as a deposit?
All right. Well, I think we can start off with, where Springpole is located. The property is located within the Birch Uchi Greenstone Belt, sort of like a sister belt in terms of the Red Lake District. A very prolific region, very favorable geology. But the thing that makes Springpole so unique is the fact that you have this 5 million ounce consolidated resource, which is practically made up of the 4.6 million ounces in indicated category, coming under just a gram per ton, and then in the inferred category we've got that 300,000 ounces total for that 5 million ounces. So the deposit is characterized as an intrusion related gold system, which means it's amenable to continuous mineralization. It's favorable in terms of open pit style extraction method, and the whole sequence in terms of the geology there is confined by these structural domains that sort of like make up the main bulk of the deposit over there. So highly continuous mineralizing system that is very favorable when we put drill holes through the deposit, and we'll show you a couple of sections today, either in the core shack or as we move around the property. We can talk to a lot about that. And essentially what you'll see is, where the bulk of these ounces are sitting in key lithologies that we've honed in on. And Matt will be able to give you a bit more of an overview in terms of like what we've done in terms of developing that structural understanding, and how do we get to sort of like delineate where the main ore body is, and how do we use that moving forward as a vector for exploration as well.
Yeah, Matt, we actually saw you showing us a bunch of ore samples in the shacks earlier today. Cool footage. We're going to show some footage for the viewers. But before we show that, why don't you explain to us some highlights of recent drill results?
So yeah, I think before we get into the recent drill results, just the general geology, like kind of honing in from the regional to the geology of Springpole, which kind of keyed into those recent drill highlights for the year. Really, some of the stuff that we've advanced through these past couple of years of our team. But Springpole as a whole has seen over 40 years of exploration work, and then within our team, we've had a pretty significant advancement of the fundamental geoscience within the past 3 years. We've really been able to delineate this stratigraphic section of Springpole as you kind of come across from the northeast down to the southwest of the deposit, where you have this conglomerate and andesite package up top, overlaid on top of the Springpole intrusion complex. And then inside of your Springpole intrusion complex, you have your intermediate oxalatives and your medium grain trachytes, which I was showing today in the core shack, which hosts the bulk of the mineralization. And those are kind of sandwiched by two subparallel megacrystic trachyte units, which make up like your Springpole complex. So that's kind of where you have these high level intrusion related lithologies that host the bulk of your Springpole mineralization, a bulk of ounces.
Roughly, what's the makeup of gold versus other minerals in the...
So the predominant style of mineralization is pyrite. Pyrite's usually about 90 to 95% of the mineralization that you'll be able to see, with minor amounts of sphalerite, galena, and chalcopyrite. And Springpole has very like microscopic amounts of gold, up to about like free gold, I want to say around 20%, and then most of the other bulk of the gold is within gold telluride systems, and that's where a lot of the silver also comes with this deposit, where we have a global resource of about 1 gram per ton gold and 5 grams per ton silver, and a lot of that is to deal with the geology mineralization system of Springpole being that gold telluride system. So that's kind of where most of the gold comes from.
Caroline, when a project is marketed as being high grade, what does that mean?
In the case of Springpole, it means that, whatever we have defined there in that resource for high grade for this project, and the style of mineralization is that it's globally representative of like a higher average. So for Springpole, the average grade is sort of around that, I said 0.94 gram per ton. We know we've got these halos of a little bit of lower grade, but the bulk of the higher grade mineralization sits in the main trend of the deposit, in what we call the portage zone. There is a slightly higher grade zone in what we call the the campsite where the starter pit is, and that essentially, is a different style of mineralization, so it has a little bit of elevated gold, and this is what you'll see in some of the core that we looked at today, where there's some of that veining coming through that Matt's highlighted in there.
Yeah, and for the starter pit, you'll see average grades up closer to that 3 gram, 4 gram material in that small starter pit, and then the bulk of the mineralization or the high grade in the main pit is around that 1 gram per ton material, with the low grade stuff being in between 0.3 to 0.7 grams per ton, call it low grade. But with this style of mineralization, because it is 50 to 100 meters wide, it is very open pit resource amenable.
I think that talks to, again, like the beauty of Springpole, because usually when people think high grade, you think of those 50 to 60 gram per ton products that are over like 1 or 2 meters, whereas Springpole is not that. You've got that consistent mineralization over long width, which makes it very favorable in terms of that economic extraction, which drives, what we would deem higher or lower grade. So when you're taking this out of the ground, you're essentially having, continuous width of just like gold distributed throughout that, because it's well distributed, as you see in those drill logs and everything that we have out there.
So do you have like a target for drilling, a certain tonnage that you're aiming to extract before you can conclude that this is a feasible project?
I would say the project has already demonstrated like that economic potential, and it's definitely feasible as we move forward. From the exploration space, what we're doing now is like we've honed in on the geoscience by bringing all of these multifaceted data layers together, driving that into a geoscience model and using that as a vector to understand where there's potential to add ounces within the current project's footprint area. And a lot of the drilling we did last fall was work done by the team to delineate, the Springpole East target, and that area was sort of like highlighted, and we went about it in a two-phased approach in terms of the exploration drilling. So the initial results, Matt, you can maybe talk to that a little bit in terms of how we got to that point and then what that follow-up.
Yeah, so for the Springpole East, it kind of came about reviewing what I was talking about, the stratigraphic section, and kind of multi-layering a bunch of data sets together. And really the best key for us was looking at the first vertical derivative magnetics in conjunction with some downhole structural data and mapping data, which really keyed in on the deposit was open, not at depth, but at the east extension, and kind of like you followed, like everyone always thinks open at depth, but instead of our open at depth is open along strike to the east. It's kind of like a little curl, like a little like a and tail wag. Yeah, kind of like a tail flipping. Sure. That's kind of like, so from that we kind of developed that theory and then tested it last year with drill results, and we ended up getting our Springpole like lithologies over 300 meters, Springpole like lithologies, and then we had some composites. That most highlighted one was 0.75 or about 114 meters within our pre-feasibility pit, which is that Springpole grade and Springpole widths that we were talking.
I want to ask a pretty rudimentary question that a non-geology expert like myself might be wondering. So the open pit currently is underwater, correct?
That is correct.
So how would that physically work when you're ready to extract the minerals?
So in terms of how the project is designed and how the earthworks and all of that would be in the most easy explainable terms, I would say, is for this project, there'll need to be some earthwork movement, and essentially 2 dikes need to be constructed. Springpole is in the bay of a lake, and the topography is very favorable to put in these 2 sort of dikes, and that will then help to sort of like dam off the water, essentially. There'll be a process that our sustainability team can take you through.
So you have to drain the lake physically?
No,
Drain a bay of the lake. So it's only 3% of the lake for like the whole, like when you look at the whole system, you look at like, as you fly over, you're like, oh, that's just, and you put it on a map, your project footprint is only like in a corner in a very tiny isolated portion of a bay of a lake.
And it's like temporary dewater, because part of the rehabilitation of the project, if you follow through that entire process, you'll see that there is a rewatering program, reintroducing all the fish and everything that has been moved throughout this project. So yeah.
Yeah, actually, before we switch back to Dan's clip, what is a day in the life of a geologist like? That's something that I think a lot of my viewers are interested in. So you
every day changes. I want to say, like, it's not every day is not the same. It depends. It's very program dependent. So say there's a drilling program going.
Sure, yeah.
The geologists, there's a lot of prep work before the drilling program goes on, where you have to go out and actually scout where you're going to go put the drill and lay it down. But during a drilling program, the drill will be drilling for 24 hours throughout the day. You'll get the core in the morning, and then when you get all this diamond drill core, you unpack it, and it's the geologist's job to unpack it, essentially organize it, and log what they see in lithology, alteration, structure, and kind of like put that all on the computer so that we can then process it, send half of it to the lab for geochemical analysis to tell us for what was in it, for the amount of gold or silver for us, like, which we're mainly concerned about. That's kind of a drill program in the day. I don't know if I missed anything.
We have our field teams going out as well, and like every morning our team was consolidated around a morning huddle or a safety meeting, talk about the day's activities, and some of them will go in the field and do regional greenfields prospecting, which is literally walking a line and gathering information, hammering rocks, describing what you're seeing, bringing those samples back. It's very, for a geologist, it's nice because you're like hiking essentially, but gathering information. And then on the drilling front, it's a combination of the logistics, managing what you're getting out of the rocks, and then bringing all of that together and making an interpretation and evolving that understanding.
Who decides where exactly the drill hole goes?
So that's a combination of the work Matt and I do with the information supplied by the team. So it's a collaborative effort.
Just high level, how does that, how is that decision made? Is it just like, it's not like playing Battlefield?
No.
Not the battleship. I mean, like, you're just randomly A7, there's the drill.
No, you kind of combine all your data together in software, essentially, and it's all geospatial. Yeah. And then you put that geospatial data in one or two softwares, and then you actually build 3D models from the subsurface data and your superficial data. And from there, from your models, you can look at extensions and other areas where you can start to pinpoint with decent or different levels of risk, depending on where you are and what the amount of data that you do have around to actually put and plot a drill hole.
So no battleships, but definitely a lot of what we call implicit modeling, using the latest technologies that is available in our products, and then just bringing it all together and then putting on your geoscience hat and then, tasting that theory.
And then after you taste the rocks, you taste the barbecue on site.
Of course.
All right, thanks guys.
No problem.
That was a lot of fun.
Thank you.
So finally, before we get to that stage of development, what's the next milestone investors need to be watching for?
It's going to be a very milestone-heavy next 12 months, particularly coming through the environmental assessment process. We've got a couple of big milestones coming up, including, our completing the comment response period, which then basically means that the governments have asked all of their questions and they're in writing their final EA reports. So that's an important one. I mean, we hope to be signing agreements with communities that we're working with. We'd love to have those done before we get the EA approval, and then that EA approval looks like it's probably Q1 of next year is what people are working to. These timelines do have a way of adjusting to make sure that everyone's getting all the work done that they need to. But as we stand now, we're sitting in the next 6 to 12 months with major catalysts that I think really will put this project in a very different light as one of maybe 3 big gold projects in Canada that could get built between now and 2030.
Well, best of luck, and I think that's good timing because it's starting to drizzle.
There you go. We've been pretty lucky so far. Absolutely.
The last 30 minutes, we had just perfect weather, and then right before there was a rainstorm. Thank you so much, Dan, for inviting us.
David, thanks for coming up. It's amazing to have you here.
Awesome.
Yeah,
Thank
really
you very
appreciate
much.
it.
Stay tuned for more for First Mining. Link down below if you want to learn more about the company. Cheers.